Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What have we got going on in the markets today? Well, the Dow's down about 220 points. Nasdaq's down about 150. We're having this down day. Now, they came out with the retail sales number, and the retail sales numbers were up, right? Well, that's bad news, you know. The Fed may have to raise interest rates. But here's the reason they were up. I mean, it's called inflation. Look they should have been up a lot more. Inflation's still running about 10%. And here's the other reason the numbers are up. It's called debt. People just buy things on their credit cards. Credit cards are at a record high, right? A record high. And those credit cards are expensive. About 20% a year people are paying on this. So they're taking their credit card to buy some really expensive stuff. Prices keep going up higher. So these retail sales numbers, I don't think they were really running that hot. I think they should have been running hotter, but this has sent the market into a little bit of a pullback. But the market's really been in this trading range, right? We're in this trading range. We went up to the 50-day moving average. We touched it. Now we come back a little bit, probably come down to the 20-day moving average before we bounce up higher to the 50-day. But so the market's been in this sideways pattern, but where's the action been? The action's been in the bond market. The bond market, a lot of people just look at the stock market. Stock market's still strong, but the bond market has never had a bigger crash in the history of the world. The bond market is free falling, down about 50% on the long-term bonds, right? 50%. Now, what does that mean? It means that this is supposed to be the safety trade, right? Bonds are safe. Stocks are supposed to be volatile. But what we got right now, we got bonds being volatile, and the stocks are kind of the steady thing. You see, something's going to break, right? Because this bond market has fallen by about 50%. And who gets hurt with that? Well, that's the banks. They own the bonds, right? Pension funds, the insurance companies, these are all owning the bonds. And if they had to mark their assets to the market level, they would have these huge, massive losses. They can't do that, though. So they're just going to hold on to these bonds for the next 30 years until they mature, and then they get their money back. But that's not really what's happened. The bonds are in a free fall, down about 50%. So all these banks, they've lost your money. You put your money in, they bought the bonds. The bonds are half off now. If you want your money back, they can't get it. They'd have to sell the bonds, and that would be a major problem. So something's going to break really soon, in my opinion. But the stock market is still solid, right? And I think they're going to try to push it up higher. That's just my take. Your take may be completely different. Let's get over to the real estate market now. Okay, so the home builders come out. Well, they're feeling lousy. And they should feel lousy. Just look at the stock prices of these home builders, down 20 to 30%. D.R. Horton down about 30%. It was up here at 130. Now it's down here around 100, down 30%. Same with the Lennar. Same with Toll Brothers. Same with Pulte. Their stocks are going down. Now, why is that? Well, the thing is they're starting to cut prices, right? So they're cutting prices, and that's getting people to come and buy, but they're not making a lot of money because they have to cut the prices, right? And what they're offering, well, they're offering the rate buy down. Now, if you watch Economic Ninja, he had some real interesting recording of some Lennar executives talking with their contractors, and they were telling them, look, we can't afford to do these buybacks anymore. It's just costing us too much money. We're not making enough money, so they're trying to get the contractors trying to lower their price for their builders, right? Okay, so the home builders, they're in a lot of trouble now. Now you see these big builders, they're buying the rates down, right? Rates up here about 7.75%, but they buy them down. They buy them down to 5.75%, so people will come in and be able to buy the homes. All right, but the smaller builders, they can only buy the rate down for like 1 or 2 years. Now, if they buy it down from, 7.75 down to this 5.75, okay, so people think they're getting this 5.75 and they qualify for the loan, but they they have to be able to qualify at the higher price if it adjusts back up. You see, the rate they're buying it down for 1 or 2 years only, so the buyer coming in has to still qualify at the higher rate. That's something new since the great financial crisis. It's no, in the great financial crisis, it was wild what they were doing. They were giving like a 1% teaser rate for the first 6 months. So they were paying, let's say, $1,000. And then after 6 months, the loan would jump up to $4,000. But back then, you could qualify the person at the $1,000 rate, even though the loan was going to be a $4,000 a month payment after the first 6 months. They'd qualify you on that first 6 months. Well, no wonder so many people defaulted. That was the subprime mess because the rates jumped up. They went from paying $1,000 a month to $4,000 a month. They could qualify at $1,000, couldn't qualify at $4,000. So now they make you qualify at the higher rate if it's just a 1 or 2 year buy down. So even though the builder's buying it down from 7.75 down to 5.75, the buyers have to qualify at the higher rate. And this is resulting in a lot of buyers backing out of the contract because they cannot qualify. A lot of they go in and they purchase the home, they sign the papers, but they can't qualify, so it falls out of escrow. 15% of the homes are falling out of escrow right now because the buyers are backing out. They don't really have a choice. They can't qualify, right? They can't get the loan. So, okay, so that's a problem for the home builders. And these home builders are feeling lousy. Well, here's why they're feeling lousy. People can't afford to buy the homes that they're building. They're building these big homes, these McMansions. Why don't they buy the little starter homes? You know, the $400,000 home that's about a 1,200 square foot, let's call it in some areas. They don't build the starter homes. Now, the reason they don't build them is because the cost of getting all the permits and all the fees they have to build it doesn't make it profitable. So they have to build a McMansion. They have to build the big houses, and people can't afford the big house. People don't even want the big houses, but that's what the builders are building. So the builders are not feeling very successful right now. They're feeling kind of lousy. They're feeling down. And they also are complaining that there's no buyer traffic, right? Nobody's coming to look at the big McMansions because the buyers, they can't afford those. They're priced out of the market for those homes. So there's nobody coming to look at them. There's no foot traffic. Now, here was something interesting. This is a little side note. Okay. So anyways, there's a house for rent on my street, right? Okay. It's on my street. It's for rent. And they started this house out for rent at $6,000 a month. And I've never really seen this before in my area. They're holding open houses for this rental property. Well, this rental property is not renting. That's kind of funny. Now, I know it's not really the best time of year to rent a property because people come to my area because of the school districts. They want to live in the higher school district, right? So schools have already started, so a lot of people aren't really moving this time of year. But this has been an open house for 4 weekends in a row now. 4 weekends this house has been held open. And it's a ghost town. I go in there and I talk to the guy, and here's what happened. Basically the people, they got relocated, but they don't want to sell their house because they're locked in at 2.8%. They don't want to sell it. They want to hold on to it, right? Because at 2.8%, and they're trying to get $6,000 a month. Well, okay, so I stopped by there again this past weekend, and they were down to $5,000, and they said they would take $4,800. Now, I think they'll get $4,800, right? Okay, but this is the exact same house. The one next door to me rents for $6,000. This is the exact same house. It's renting for $4,800 is what they'll take. That's a 20% drop in the rental price. And they'll probably get that. I believe they'll get that. But when you think about it, $4,800 a month, their property tax bill is about $2,000 a month. So they're going to be getting about $2,800 a month. Now, they could sell the property for $2 million. $2 million, put it in the bank, and you'd get what? You get about $10,000 a month as opposed to the $2,800 a month they're getting. Okay, so that's a little problem. Doesn't make any sense, but they're locked in at 2.8%, so they don't want to sell that house. And we're seeing this a lot more often, so a lot of properties are becoming onto the market as rental properties when people get relocated, when things happen. They don't want to sell the property because they're locked in, right? Well, this is a problem. Rents are starting to go down just right in my area. That's a 20% drop from this one over here. Exact same house, 6,000, 4,800, 20% drop in rental prices. Rental prices are now dropping across the nation. Okay, now why is that? Well, because apartments. There's never been more apartments completed. New apartment inventory has come onto the market at a faster rate this year. You'd have to go back to the 1980s to find new apartments being built. But these apartment rents are still high. But they're going to start to come down because they cannot get the prices they're asking. People don't have the money. And renters, they now have more choices with the new inventory, with people that have a house they want to rent because they want to hold on to it at the 2.8%. You're seeing the rent starting to come down because it doesn't make sense, especially in my area. Look, they're trying to rent that for $4,800. Now someone comes in to buy that property, they're looking at least 3 times that to purchase the property. A monthly payment, $4,800 a month, they'd be looking at $15,000 a month. Okay, so that's about 3 times as much. So isn't it better to rent right now? Now look, I love real estate and there's going to be opportunities. There's going to be a good time to buy. But right now is not that time. It's just not a good time to buy. Now, Barbara Cochran, she was out this weekend again saying that there's never been a better time to buy. I think the lady's personally crazy. But in the article I was reading, it's kind of funny. See, now she was warning, Barbara Cochran was warning that prices may pop again if interest rates get lowered. Now, I agree with her. They're going to pop, but she thinks they're going to pop upwards. She thinks they're going up by 20%. I think they're going down by 40%. We'll see who's right. Time will tell. We'll see how that all plays out. But I'm predicting they will pop, Barbara. They're going to pop in the downward direction, even when they lower the rates, because that's where the bad stuff starts to happen. They don't lower rates for good reasons. They lower them for bad reasons. There'll be job losses. We'll be in the recession at that time. And you know what's funny right now? Right now they're trying to figure out how to get people to sell their houses, right? So, I mean, the people, the politicians are getting together and the things they're talking about just cracks me up, okay? So they're talking about wiping out capital gains taxes on your personal property so that way you won't have capital gains. You can sell the property then, right? Okay, that's interesting. All right. So now they're also talking about the weird stuff, taking away the mortgage interest rate deduction. You see, when you buy a house and you have this big mortgage to pay, $10,000 a month, you get this deduction. You get a mortgage interest rate deduction. They're talking about taking that away. And when you think about it, really, why do they get that benefit? I mean, does the renter get to deduct his rent? No, he's the poor guy. He doesn't get the deduction. Look at the rich guy. Let's give him the deduction. So they're talking about taking away the mortgage interest rate deduction. That's very fascinating to me. The other thing they're talking about is taking away the depreciation on rental properties. See, when these corporations, when mom and pop, even whoever buys the rental property, they get to depreciate that property. Even though that property is going up, they get to write that property off in the form of depreciation. So the investor gets this extra benefit, right? Maybe that should be taken away. Maybe he should not be allowed to depreciate the property. These are just things that they're talking about. In my area, it's getting a little scary. They want to wipe out Proposition 13 in California. Prop 13 is all that says is when you buy a house that your property taxes stay at that level. Even if the house doubles, your property taxes cannot go up by more than 2% a year. Now, a lot of people are locked into a lower property tax in California. And in California, if you're a senior citizen, you can sell your house and buy another one, keep the same property tax. But they're trying to do away with this Prop 13 where all property taxes go up to the market value. Now, if this this were to happen, I guarantee you 20% of the properties in California would be dumped on the market overnight. I mean, people could not afford to hold on to them. So there's a lot of things they're talking about trying to push the inventory onto the marketplace. Now, do I think any of them will happen? Probably not. But if they do, it will be a seismic shift in the real estate market that will be felt by everybody. Anyways, that's just what they're talking about doing. Now, a lot of people I hear in the comments, they always say, but Mike, you just go on these rants and you tell us all the things that are wrong. You don't tell us how to fix the problem. Well, those were just 4 things that they could do to put inventory onto the marketplace. But I'm not here to be your financial advisor. You have to make the decisions for yourself. Look, I'm telling you as a real estate broker, I think it's a terrible, terrible time to buy a property right now. Now, you can go out and buy a property. I'm not going to stop you. I would like to sell you one. I mean, that's my job, right? I sell houses. So I would be more than willing to sell you a property. I just would make you sign a disclosure statement saying that property can go down by 50% because I don't want to be sued when it happens, because you're going to go out there and you're going to buy this property up here at the price Billy Bob got out at, and 3-4 years from now that'll be half off, and who do you look to sue? You dumb realtor, right? He's the one that sold it to me. He's the one that said it's a great time to buy. I'm telling you, it's not a great time to buy. I'll make you sign a disclosure that says this property is going to be half off in 3 years, and that way I will not be getting sued. But look at it, I'm not here to be your financial advisor. Look at, I think it's a terrible time to buy a property. What would I do if I was a young guy in the millennial crowd? Would I buy? No, I would sit back and I'd rent a property. Would I save up my money? Oh, I'd be saving like crazy. I'd be saving so much. I wouldn't be going out to eat. I'd be saving that money. You know why? I'd be putting that money into silver. That's what I'd be doing until I get at least 500 ounces of silver. I'm telling you, you're going to take that 500 ounces and you're going to be able to trade that for the average price home. I really believe that would happen. Now, is that advice? I don't know. That's what I would do if I was a millennial. If I was a younger person, I'd be saving my money, but I'd be saving it in something that I think is going to appreciate a lot. And that's my take. Now, a lot of the millennials, they save their money and they put it in Bitcoin. Now, if Bitcoin goes to $1 million, well, then they made the right move. Now, I don't see Bitcoin going to $1 million, but a lot of the young millennials, they see Bitcoin going to $1 million. So maybe that's their play. I think the best play is silver. That's just my take. That's what I am doing. I got my 500 ounces of silver, and if, I'm an older guy, I don't know if I want another rental property. I used to have a lot of rental properties, and they're kind of a headache. People, tenants are headaches. They're not that easy. Something breaks, who they call? They're going to call you, and it's usually on the weekend. You're having some fun. You're out playing golf or out at the beach, and you get the call, toilet's backed up. Well, then you got to go call your plumber, get him out there. It's kind of a headache to rent a property. So I'm not sure I want to get back into that rental business anymore, especially in California, man. They just hate landlords in California. You don't have any rights anymore. They threw the Constitution out the window. So anyways, I do go on these little rants, right? That's what I do. That's just what I do. And that's why you come and watch me. Now, those moon boys, they'll be in the comments complaining, a lot of people don't like my take on the housing market going to come down by 40%. I get that that's not popular, and I understand that, but that's my take. That's what I believe is going to happen. Go listen to someone else and they'll give you another take. Go call up your local realtor. They'll tell you it's a great time to buy. My take is it's a terrible time to buy. Going to be coming down 30 to 40%. I'm Tall Mike. Get out there, everybody. Enjoy your day, and punch the subscribe button so we can talk some more. Bye-bye now.